What's going on, guys? It's Juan back in the video. In today's video, we're going to be covering taxes. That's right, I said taxes. So for all my regular folks that come in here for the fun content and are not looking for something educational, this video is probably not for you. For all my friends out there that are Twitch streamers, content creators, OnlyFans content creators, this video is designed to help spark those internal thoughts to get the ball rolling for next year's tax season. I'm going to do my best to timestamp out the important parts. We've got some good segments on, whether you should be an LLC, what defines you as a hobbyist or a professional business. The other thing to think about is, what are classified as deductions, how do giveaways work, how do donations work, things like that. So that's what this video is about. Hope you guys enjoy it. I just want to emphasize again that this is not like any of the regular content you've seen before. This is more interview style. We did not do it here in the studio area, so it's gonna be a little different, so bear with me. It's a long one. It is a really long video, so sit down, get some popcorn, get some coffee, get a nice pen and paper to take some notes, and hopefully you guys get something out of this. If you have extra questions, please comment them down below. We're gonna get Ruben to come to the stream and hopefully answer some more of your questions. I have two guests today. The first one is Ruben. He's a tax professional in Austin, Texas. He does amazing work. If you know anyone that is struggling with the IRS or has tax issues, or if you yourself are having tax issues, please give him a call. I'll put all his information in the description box. He's amazing. He can help you out. The other person featured in this video is another content creator, competitive gamer. He goes by Gunch FPS or Art. Great guy. He has some really good questions. And so if you guys would like to check him out, I'll also have his information down in the description. So I'm Juan Martinez, content creator on Twitch. I'm a variety streamer, a hack gamer because I don't really game. People don't watch me for my gaming. People watch me for my just chatting content. But I wanted to put this together so that people have some information to get the ball going, kind of thinking forward in terms of content creation. And it could be for anything. It doesn't have to be just Twitch. It could be for OnlyFans. It could be for any other type of content creation, to have that kind of, that little mindset of, okay, what should we be thinking about? Because pretty soon here, we're going to have to be submitting our tax information. Some of us are making a bunch of money. Some of us aren't making very much money. And so I want to just kind of hit on a little bit of everything, so that kind of sparks that conversation, so that people can really have some information to kind of drive it home.
Yeah. I generally, my line of expertise is client representation before the IRS. And a lot of people, they tend to file their tax returns, and they tend to omit information due to lack of knowledge. Well, one of my jobs is to defend taxpayers before the IRS and represent them, whether it'll be just your tax return being picked up for examination, or you owing money to the IRS. So my expertise is representation before the IRS, and then also settlement with the IRS when they owe a lot of money. One thing that I do want to add is, since I'm exposed to that line of work and I sit with IRS officers quite frequently, one of my purpose of coming here is prevention. How do you prevent from for your tax return? I don't want to say to not be picked up for audit, is to, whenever you get selected for audit, if you ever do, then you're gonna end up in a good place, rather than finding out a bunch of surprises when it's too late, and then you're gonna be sanctioned with penalties and interest and other good stuff. So that's what we're here.
Cool. Art?
My name's Art. I'm a small content creator on Twitch. I have a lot of friends that are content creators on Twitch in varying degrees and how big of Twitch channels that they have, and I like them, probably have a lot of questions that go well above my head. So I wanted to be here, kind of get some questions out, ask Ruben, a little bit about what I can do to kind of prepare for this coming tax season, because it's one of those things where when you're just kind of gaming and you're just kind of streaming, you don't really think about those kind of like real life situations. So.
Yeah, exactly. Well, cool, man. Thank you guys for taking the time. Really appreciate it. So the first thing I have here is, okay, I'm kind of new to content creation, right? I'm maybe making $100 a month. For Twitch, for example, you don't get a payout till you get your first $100 is made. And so that might be 2 months for some people, it might be 3 months. Some people might do it right away. So if you're in that boat, right, just starting out, small streamer, you've made your first $100, $200, do you start to think about, okay, should I be an LLC? Should I register myself as a business? Or what are your thoughts on that?
I think first you must sit down and ask yourself some honest questions. Where am I going with this? Is this just a hobby, or is this what I want it to be, a full-blown trader business where I'm going to depend on this to live? So a hobby is generally seen by the IRS as extremely informal. But what happens here is that whenever you are considered a hobby, what's going to happen is that you will be subject to all of your expenses, meaning that, for instance, let's say that you made $1,000 that whole year, and you spent $10,000 on all the gaming gear, internet, all that other good stuff. You will be subject to limitations of those $1,000. So meaning that you cannot deduct the full $10,000. You can only overwrite the existing hobby income. So now let's say, for instance, that you say, you know what, I want this to be my business, or a true serious side hustle, if you want to call it that. You would go into registering your name, registering your business name, and then getting your employer identification number through the IRS, and going open a bank account. Now, every single pay that you received in the trader business of that particular activity, you're going to deposit that money into that account. And then every expense, you're going to be using that debit card from that account to make sure that at the end of the year, you'll print out the 12 bank statements. You'll be extremely organized. You'll do a little Excel spreadsheet. You're like, okay, look, I made, I don't know, $10,000 this year, and I spend this much amount of money in internet, in rent, if you have to rent a little place. We'll go in a little bit into detail when you have to allocate between your primary residence and your workspace, but that's how much you would actually, that's how you would actually reconcile your accounts at the end of the year. And if you get selected for examination, then now the IRS says, oh, okay, it looks like you're taking this a lot more serious than just a hobby, because you have a business account. You're keeping all the expenses from your personal to your business separate. So now we can actually consider you more serious, and they won't start mentioning or throwing around the term whether is this a hobby or a business. I know that was a long explanation to your question.
It's a lot.
So to kind of follow up on that, let's just say that we're coming up at the end of the year. We're going to be filing our taxes. Let's just say that, a small streamer made $1,500 or less throughout the year, right? But he didn't do any of the steps that you talked about that they should do as far as preparing yourself for like the tax season. What do they do? What's the best course of action?
That's a good question. So let's say, for instance, that you've been commingling funds from your personal account. You haven't really opened up an account. You need to do what every businesses would do at the end of the year. Generate a profit and loss, right? How much income have I earned? What has been my expenses? But my expenses that have been directly correlated in the production of this income, okay? So like, for instance, let's say that you bought a car, okay? A car that doesn't have to do anything with your business to earn this income. You're not going to take that deduction. You're going to take the deductions of the expenses that were directly correlated with the earning of this income. So what do? Just as every business, you're going to go through your bank accounts, credit card statements, and say, you know what, this is how much money I've made. Because those were my deposits. But then also, oh look, on my bank statements here, I show that I spend this much amount of money on a particular subscription or a membership that helped me in connection of this to earn this income. So you would go down the list. You can open up, you don't have to buy an expensive accounting software. All you have to do is, open up an Excel sheet. Income. How much income did you receive throughout the whole year? Expenses. Advertisement, computer equipment,
Right.
so all that, games. So you would go in there line by line and see how much you've actually spent. You will generate that profit and loss. Now, I think that out of the scope of this interview or this general topics, computer is not generally expends the full entire amount that year. It's the computer is considered an asset, meaning it has to be depreciated within a certain amount of time.
Okay.
So that's another thing that you're going to be using TurboTax to file your income tax return, and you bought a computer that was $2,000. Generally, it's considered an asset because it's going to last you more than a year. So you have to take depreciation on it. You don't take the full 2,000. You generally will take some depreciation on it. So
okay,
yeah.
That's good to know. So a lot of people are going to want to try to do their computers or a graphics card or a mouse, keyboard. Does that fall into the same thing? Like if you're going to keep a mouse for a while, probably a keyboard.
Well, what happens is this: you can either like take a total sum of the equipment. Let's say that you purchase it on the same date. So you would take the full sum of the equipment and depreciate it within the allowable time. And let's say that the total amount was $3,000, and let's say that it was 3 years depreciation. I don't remember the top of my head right now whether it's 3 years or 5 years for computer equipment, but you will take $3,000 for the next 3 years if it was for 3 years. Now for stuff that's very de minimis, very small, generally you can expense it. From the first line defense at the IRS, I've never come back and the IRS auditor, revenue agent has never come back and say, hey, you took the full expense of $100 mouse. It's pretty cheap.
Yes.
They're not going to come back and say it's very de minimis. It's not worth the effort of the IRS. So I guess if it's an asset, you should depreciate it. But again, that's more of your judgment call at that time
when you're filing.
Yeah.
Now, like some computer equipment can get drastically expensive, but let's just say you're not necessarily generating that kind of income yet, but you still want to go crazy and spend $8,000-$9,000 on a computer, more than that. Does that mean that you can like you said, expense the depreciation on that?
Yeah, you can still take, but then okay, now we have to look into like whether you're a hobby or whether you're a business. If you are a business, then you can technically, because at the end of the year you're gonna generate a loss, right? Because you bought a $10,000 computer equipment. Now with a depreciation on it, and let's say you only made $1,000, you're gonna be generating a loss. So we need to make sure that you are following the proper steps to be considered a business. Okay, so yes, you can take the deduction of the full $10,000 following depreciation schedules, but you need to make sure that you're carrying yourself as a business.
I see.
Because if not, then the IRS is going to say, nope, you're a hobby. I'm going to suspend all your losses. Okay, and another thing, if they actually come back and suspend all your losses because they determine that you were a hobbyist rather than a trade or a business, what's going to happen is you're not only going to have to pay the difference, you're going to have to pay what's called Internal Revenue Code 6662, which is accuracy related penalty. So they're going to give you a penalty on top of that and interest. So you need to be careful, because now you not only have to worry about paying the tax that you were supposed to pay originally, plus the penalty, plus the interest. And the only way to get rid of those penalties is what? Under a reasonable cause. Reasonable cause is not, I don't know, I didn't know. So that's.
And just to clarify, the example you just gave is in the event that you expense everything, the $10,000 computer, a bunch of other expenses, and then the IRS picks you for audit, and then they come back and say, well, actually, you're not a business. This is your hobby.
Yeah, exactly. So they determined that you were a hobby. And then just a quick thing, I just want to read the hobby questions that you got to keep in mind. So one of the questions, and this is actually based on a big court case, the U.S. tax court. You know, the IRS applies the law as a black and white. Whenever it goes to the tax court, it's because the IRS is applying the law in such a black-white letter of law that it doesn't follow the spirit of the law. So that's why you go into the tax court, and then the trier of fact, which is the judge, generally determines what the spirit of the law is and then applies it to that particular case. So one of the number one questions is, do you keep good business records? What is good business records? Do you keep a separate account? Are we keeping all the receipts when it comes to every expense that I had? Okay. Do you have a separate checking account, and do you run your business as a trader business? What does that mean? If you pay another gamer or you pay somebody else, you're required to send them 1099s. Okay. So that's another thing. If you pay somebody more than $600, you're required to send them a 1099s. So that's where you have to actually kind of say, are you running your gig as a business or not? The second question is, do you put the time and effort into marketing and other activities to bring in customers? Meaning, are you actively and materially participating in achieving more customers and increasing your profits, or you're extremely passive? Now, are your business losses beyond your control or typical from a startup businesses? Remember that the only reason why the IRS will bring up whether it's a hobby or not is if you are generating losses. The other one is, do you make changes in your operations to improve your profits? So what are you tweaking? Are you actively engaged in the operations to make sure that you're not just passively letting your business generate losses to overwrite your other income and get all that federal refund at the end of the year? Do you have business expertise? So what is your background? Have you been a gamer? Was your father a gamer? Was your family of gamers or professional gamers? Or what are your expertise when it comes to this particular business that is gonna most likely make you successful? Or is it just somebody that just decided from one minute to the other, oh, I should probably be a gamer? So what is your expertise? How many years of experience? How many have you been gaming at the competitive stage? What is your background? Have you hired any experts in the field to make you a better business operators, or what has been your efforts? Have you been successful in similar businesses in the past? That's the other questions. So if you notice, there's a lot of questions that you have to approve before they say, oh, you're a trader business.
Now, do you have to have all of those answers be yes in order for you to be approved to be a trader business?
It's gonna be on a case by case basis, but a lot of this stuff you have to fulfill these 9 questions. The last 2 questions are, do you make a profit in some years and how much? Meaning that, let's say that you've been operating, because you're not going to get selected for examination on the first year. It's generally after 3-4 years. They're gonna examine your tax returns and say, well, you know what? Okay, it looks like for the first 2 years you were doing pretty bad, but then the last 2 years you were very successful. So okay, we can see how and then can you expect to make a profit in the future? So that's the last question. So to answer your questions, do you have to fulfill all these questions? In theory, yes. That's what the court has been relying on to depend whether you're truly a hobby or a business. And that goes the same thing with not only gamers, but for horse racing, gambling. So it goes for anything that can potentially be considered a hobby. And as a matter of fact, it can also be, it doesn't have to be like something fun, if you want to call it that. It can also be something that's not too fun. The IRS can come back and say, I think you're just creating this business for the sole purpose to generate a loss. Because they can come back and say that. Mm-hmm. So, but if you say, no, I'm a trader of business, and a trader of business can have losses, then you just prove your position. As far as the deduction aspect, as long as anything that you purchase, and instead of giving you a list, because the list can go on and on and on and on, I'd rather much teach you the concept of what is deductible or not. So as long as whenever you are about to make a purchase, whatever it may be, whether it be a simple pen, whether it be a helicopter or a yacht, whatever you will purchase, is this purchase ordinary and necessary for the operations of this business? Is it going to help me make a profit? Is it going to achieve a position where it's going to help me increase my business, increase my clientele? The question you should always ask yourself, is this purchase ordinary and necessary for this business, yes or no. Okay, so if it's ordinary and necessary, like for instance in gaming, is a computer necessary? Yes. Okay, well, there we go. But now, let's say for instance, is a yacht necessary? Maybe. If, let's say for instance, that you are the gamer that likes to hold gaming conferences in the middle of the ocean and everybody pays a fee. You see? You may say no, but it depends.
I got you.
That's the reason why I want you to learn the concept
Write that
more
business
than
idea
anything.
down. Yacht gaming conference.
Yeah,
in the
yeah.
middle of the ocean.
So it really comes down to what is necessary or ordinary depending on how you run your business. Because not one size fits all, and that is why I rather much give you the concept rather than the list. So yes, a yacht could be necessary if that is what you do. So, and that's why if you notice, there's a lot of yachts that are owned by businesses because that's a typical conferences or whatever they do. So at the end of the day, is it ordinary or necessary?
Good context there. The next thing that you had mentioned earlier that you guys want to talk about was donations, and that's a big one because I didn't even think about it in the first place. Are donations taxable? Should you be keeping track of your donations? Should they be in a separate account? How does all that work?
Let's first handle the donations that you as a gamer or as a content creator are receiving. Are you receiving this donation as a trader or business? A trader or business doesn't really receive donations, okay? They generally receive income, okay? Not unless you are considered a nonprofit organization. Remember, a trader business is considered for profit. A nonprofit organization receives donations because they're not trying to make a profit of the individuals. So that's why they receive donations. If you are wanting to push yourself and say, I'm considered a trader business, a donation is not, if you want to call it a donation, you can call it all day you want a donation, but it's not going to be a donation, it's going to be income to you. Why? Because you are not a nonprofit organization. Now, here's the other thing. Let's say, for instance, that I don't care about being considered a trader or business. This is my hobby, okay? Is a donation considered income? Yes or no? It depends. Is the person giving you the money giving it to the individual or giving it to your entity, to your doing business as, or who are they giving it to? Because I can give him right now $15,000. Does he have to pay any taxes on that? No, because I am giving it to him as an individual. Now, if he has a trader or business and I give him $15,000, does he have to pay taxes? Yes, because he's a trader or business. So who are you giving him as an individual? And now we go to the aspect of donations. Deductions of donations. So if I'm giving somebody money as a donation, if you're a trader business, remember a trader business has to have expenses. The donation is not really a donations of the corporation. Like you cannot donate to an individual. What you are doing really is imagine.
So you're talking about you, the streamer, giving to another
giving to another person.
Okay.
If you're a trader business, imagine there's a bucket. Okay, all the income and all the income is inside this bucket. Okay, in order for you to put money in, that's a taxable event. You consider income. Whenever you're reaching out in this bucket and you're reaching out for income and you're taking it out, it's another taxable event. It could be for an expense. If you're calling this a donation, what you're really doing is it's not an expense. So what is it? What is it going to be left with this transaction? Is going to be a distribution to the owner. So it's going to be profits for you. So what you're really doing is you got the trader business. You're taking this money out, you're giving it to your individual, and then from the individual, you're giving it to the gamer. That's really what you are doing. So it's not really an expense for the business. And what's happening is that a lot of people what they're doing is, they're considering a donation an expense. But then remember, the IRS, what they do is if you take a deduction of something, the IRS is expecting for somebody else to pay the tax. Okay, so it's kind of like algebra. What you do to one side of the equation, you got to do to the other. Okay, the same thing in tax. If somebody takes a deduction, somebody else got to pay the expense. So, long story short, in this case, you cannot just give money to somebody. You take a deduction and nobody pays tax on that. So you can always give money to somebody, but remember that there's maybe implications where you have to consider that as income first, and then you're giving it to somebody else, because you can always give money, okay? But remember that it's not going to be an expense, because is it ordinary or necessary? Let's put it this way. Is it ordinary or necessary to give money? Maybe, right? However, you have to establish what is the fair market value, because some people can donate. That's like kind of like a controversy case that you could have with the IRS.
Right.
You can say, you know what? Maybe I need to give this guy $1,000 right now because that's the only way that I can get more followers or more people to follow me or more clients.
Clout chasing, or like Mr. Beast. I mean, he was giving $10,000 at a time to Ninja, right? And that was like a way for him to advertise, because Ninja had 60 to 70,000 people sitting there live, and then oh my God, it's a $10,000 donation. Mr. Beast, thank you so much. Oh, go check out Mr. Beast on YouTube. Now that's advertisement. Now you've got 50, 60,000 people that might have not known who he was that now know who he is. And so that's kind of the mindset I think most people are going to have, but that's not always the case.
But you can have a marketing or advertisement expense. However, the fact that this is not traditional marketing, because whenever you are thinking of a marketing or an advertisement expense, is, let's say for instance that I hire you for advertisement. I'm gonna give you $10,000 right now, and we're gonna sign a contract of what you're going to be doing for those $10,000 and the services that you are providing. This is not the case.
Right.
You see, right now you're giving them $10,000 to this random gamer. Yes, with the intent to get more followers, but in reality, is it really getting you more followers or not? Maybe, maybe not. So it's more like gambling now.
Gotcha.
You see, it's more like gambling, because now if I give him the $10,000 and we sign a contract, and then he says, I promise to do this, this, and that, because that's truly what a contract is, a promise to do something. I give him $10,000, he performs the work, I get more clients, our contract is done. This is what I paid, this is what I received. The other case is you're just throwing money, like at a casino, with the hopes that you're going to get, you're just trying to fish.
Right.
And that's really, I mean, is it an expense? Is it marketing? It could be, but then that would have to be, since this is a very, very new industry, that could be heavy litigated in tax court to determine whether some of it may be reasonable or not.
Gotcha.
But at this point, it could be considered marketing as long as it's reasonable. What's reasonable? Who knows?
Right. Well,
we never know what's reasonable.
You're right, man. Because I mean, same thing, right? Like Ninja, or even you, for instance, or you, right? Your number is different. Everyone's number is different for a guest appearance, or for gaming with someone, or everyone's number is different, right? So 10,000 might be reasonable, and for Ninja, it probably is reasonable, right? Like you're gonna have to pay the man to show up.
Yeah.
I guess the whole concept of this topic is this going to be an advertisement or marketing? We don't know. It's a gray area due to the fact that this is a new industry. However, under current tax law, this may not be seen as a true expense.
Gotcha.
The purpose of this video is for you guys to understand that don't be surprised.
Right.
If that's how the IRS treats that expense.
If you're expensing it, pick up your tax return, and then they're like, whoa. You're saying don't be surprised.
Tax law is old school.
Gotcha.
Okay, tax law is old school. And I'm going to touch a little bit in OnlyFans.
Go for it.
OnlyFans, there's actually a few cases that we've talked about that are actually in court right now, whether lingerie, personal cosmetics, surgeries to their body is an actual expense or not. Under traditional tax law, that thing has never been an expense. Okay? So now we go back to the same concept, trade or a business. Are you treating this as a trade or a business? Some people, some models go through thousands of dollars a week on your lingerie because once you have an outfit and you use it for a photo shoot, that outfit is practically obsolete. So it's like it's no longer good. So you have to buy more. And what's happening here is that, is it really a deduction because you're a trade or a business or not? So there's a lot of areas evolving. There's a lot of areas being born, which our tax system is extremely old-fashioned.
Right.
We can potentially do some changes. And how do we do changes? Until one of you gets selected for examination, hires one of us to fight your case in court, try to prove that you're that was truly an ordinary necessary business expense, have the federal judge agree, then we just create a case law, presidents in that aspect, and now we just created a new era of new ways to look at tax law.
Gotcha.
But one of y'all needs to get selected first, go through all those headaches,
so if you're that
invest
person,
thousands of dollars.
If you're that person, reach out to Ruben. He's
exactly.
ready
You guys will have to go through all that and try to prove those deductions were truly ordinary and necessary. But that's the only way that we can change tax law. Because you ask, how do we change it? That's how we change it. You have to go out there, get selected for examination, piss off the IRS, and then file the petition to the U.S. tax court. They'll review the case. That one's probably going to be a full-blown trial, trust me, because that one, we're going to have to put witness on the stands. Most likely, it's going to be complicated. Why? Because most likely, the IRS or the federal judge is not going to say, remember, they're quite old. Right. They're older than us. So what's going to happen is they're not just going to say, oh, okay, well, it makes sense. No. We have to, whoever tries this case is going to spend significant amount of money to lay the pathway for everybody else coming behind. So whoever volunteers, they're a great citizen.
They're a great citizen, putting up all that money.
I did have a question to circle back on the donations.
Go for it.
So I've seen certain streamers put up, their big donations, but I've also seen some of the streamers post up that they get donations in forms of like a alternative, in terms of like cryptocurrency. And I was kind of curious, like if you as a streamer receive, a donation, regardless of whether it's a hobby or it's your full-blown career, if you receive a donation in cryptocurrency, how is that looked as far as taxes goes? And then on top of that, if that cryptocurrency continues to rise in value, how does that also look as far as taxes goes? Okay,
so that's actually a really good question. So the first thing is first. So whenever you receive any donations, whether it be in goods, in cryptocurrency, in dollars, in pesos, in euros, whatever it may be, it's money or it's a goods that has value to it. As soon as you receive something, let's assume that you're a trader or business, you have to consider that income, okay? Now, let's say for instance that today today's not December the 1st, but let's say on December the 1st you got, 100 Bitcoins, okay? And on the 1st of December you got 100 Bitcoins, but the Bitcoin was only $1, okay? Just for simplicity. So what do you do at this point? Well, you report at the time when you receive that income. So if you, on December the 1st, you received 100 Bitcoins that were worth $1, you're going to report the $100 as income that you received during that day. Now, if it increases in value, that's unrealized gains right now. So, eventually, if you decide to sell it, your cost, which is traditionally for those people that have been in stocks and all that, your basis is $100. Let's say, for instance, that now you sell it for $100,000. So your cost is that you just recognize income on the profit itself. But yet you will have to recognize income at the time of the minute that you receive.
So you recognize the instantaneous value that year as
when
income. When you sell it, you pay taxes on the gains.
Now, what happens at the opposite? Because of how volatile it is, what happens if it drops the very next day in value?
The same thing. Now what's happening is that you recognize the $100 and you sell it next week because now it dropped to almost zero. You can recognize the loss. Yeah.
Okay.
And that can be a loss towards your trader business.
Towards your trader business.
Interesting.
Yeah, you recognize the loss.
But if it's just a hobby and someone gifts you...
If it's just a hobby and I give it to you as an individual like art, so that case you don't have to consider any income. Okay? It's because a lot of the I think it's important to clarify the distinction between the individual and the entity. If I'm giving you the money, you as an individual, I can give you any money to you and you don't have to pay a single cent in tax. Your basis, okay, is the basis on the time of the gift. The problem is that me as an individual, I can give you any money I want. You're not going to recognize any tax. However, here's the catch. Okay. A U.S. citizen that gives more than $15,000 during a taxable year from January 1st to December 31st to one individual, more than $15,000, they're required to follow a gift tax return. Okay. And the person that receives the money, they don't recognize any income. But the person that gives the money, they must file a gift tax return. So that's what I was going to. Long story short, you don't recognize an income as an individual. If you are if they give it to the actual entity themselves, in theory you will recognize income because, including a hobby. Why? Because that you're doing it with that particular activity, and that's where it becomes a problem.
Gotcha. Okay. Cool. So we kind of touched on what can we write off. We touched on donations, cryptocurrency donations, OnlyFans expenses. Is there any tips for content creators in terms of, how do they invest in themselves, or should they reinvest in themselves first before they start to take from that bucket and spend money?
Yeah, so definitely that's more of I guess business strategies. It really depends. Every business you should definitely have a cushion there in order to be able to spend for any ordinary necessary business expenses. So I truly believe that you should definitely the income that you're generating throughout that time, especially if you are considering this a trade or a business, it's important for you to leave the money there to be able to continue to reinvest that income to eventually become profitable, because cash is king right now, and if you are draining the business account every single time, obviously if you're getting deposit $100,000 every 2 weeks, it's good. But if in a situation you're starting out, you should probably more likely leave that money there so you can actually become profitable. Because if you don't become profitable within a certain amount of time, the artist can come back and say, you know what, you are just being a hobbyist and you're not entitled to any of those deductions. So, and then also from the aspect of just business, you shouldn't be draining your business accounts. You should always have that cushion, and you should always have that money to be able for it to take care of for any emergency expenses and anything of that nature.
Gotcha. The last one I had before we hit more questions is giveaways. So, that's another aspect, a way to promote your channel, to get people in there. Let's say I give away a $20 Steam gift card, which allows people to buy games online. is that considered an advertisement deduction that's necessary for your business, or is that extra? You know, do you keep track of the cash value? What if I give away a stuffed animal, or what if I give away a book? Do you keep track of all those expenses? Is it deductible? Is it something that people should be trying to even advertise their business? Is that a good way to advertise your business?
Now, gifts are actually in ordinary and necessary business expense under the Internal Revenue Code right now. And however, they are extremely limited. And many of you are going to laugh. It's $25 per person. So meaning that, for instance, you gave a $25 stuffed animal to somebody. That $25 is deductible. So it's generally $25 per person per gift. So if you decide to give him like 30 stuffed animals, then you're only going to be able to deduct the 25.
But it's per person. So if I gave 2 gifts, I'm able to deduct each one.
Exactly.
Gotcha.
Exactly.
Okay, that's good. It's good to know.
There's also some technicalities whenever you have, for instance, the name of your channel on the gift, like pins or whatever. I don't remember on the top of my head, but we can probably post a link, which is $4 per pins, and there's other little limitations.
Like this one in particular is from Where America Works. It says Forest Creek Animal Hospital's a pin.
Yeah,
it's got advertisement on it. It's got the phone number on it.
Yeah, no, it's a great marketing thing. And then also, like, you know, generally the $25 is per person per year. So you can give them $25 every year when it comes to whenever you give giveaways. The only thing is for people that are giving substantial amount of money or goods that are expensive, you may not be eligible to deduct those expenses, and you're going to consider that as income.
Gotcha.
As an individual. So you're just, because remember, you're doing the same thing. You're pulling out of the bucket. You consider that as income and then giving them away.
Before you give it away. Gotcha. Okay. That's good. It's good to know, because I do tons of giveaways, man. So that's good. And it's multiple people. So that's good for me to know that, you know, they've each probably gotten $25 or more in value every time they win. So it's good to know.
All right.
Cool. You got any more questions? Mm-mm. Cool, man. I think we touched on a lot. Just kind of circle back around. You know, first thing to do is establish if you want to be a trader business or not. You want to be considered a hobbyist. That's like ground zero, right?
Yeah. Where are you going with this?
Right. Where are you going with this? And that's kind of big. I feel like a lot of people need to sit down and really, because some people, you know, they'll like, okay, yeah, I really want to do this 1 month, and then the next month maybe not. And so, you know, that might also determine, you know, where you lie if you do try to deduct a PC, right? That's $50,000, or not 50, but $5,000 or whatever.
Also, one last thing that I do want to add is, if you're a trader business, you want to make sure that the equipment that you are deducting is solely used for the trader business. And that is, it's gray area, because there's a lot of people that may use the same computer for many other personal stuff. And the thing is, in theory, if you have a business equipment and you're taking the full tax benefits on that business equipment, you should only use it for tax purposes. Okay. So what
you're saying is I should buy another computer.
That's one of the, you know, if you get audited, right, and you have a smart revenue agent, what are they going to ask you? Okay, I see that you have a computer here, and this computer, it's the one that you took a deduction on, but I'm guessing, do you use the computer for any personal stuff? They may say yes. Okay, where's the other computer?
Gotcha.
Oh, so you have mixed. Right. So then what they're going to do is they're going to try to allocate like between personal use and business use, and that's where it gets a little complicated, because now they're going to start disallowing some of your deductions.
Gotcha. And that's why I use my computer only for streaming or content creation. All my personal stuff is on my laptop.
Yeah.
And so that's kind of how I keep that separation.
Same. Take that, IRS.
Yeah, if you're watching.
That's good.
If you're watching. Okay, so that's kind of the first step. The next thing to do is, keep track of all your expenses. And then also to make sure that it's necessary, ordinary and necessary for your operation of streaming. And that is different case by case, right? If you're a yacht specialist and you're doing conferences out in the ocean, then it might be ordinary and necessary. Like this, but if you're a streamer in Odessa, Texas, in the desert, and you're expensing a yacht, that's probably not gonna happen. For more content like this, please consider subscribing to the YouTube channel. I'm gonna do my best to keep content like this coming to give you guys the most information possible. Also, if you found this video helpful, please consider liking it. Thanks.